Dipan Mehta is with us. Dipan, good morning. Good to have you with us here. I just want to ask you, I don't know if you have a view on black box, but that's data centers. And comment on that if you will. But before that, just the entire AI summit next week in Delhi, right, which is taking place. I was just wondering, and by the way, this is India's hosting the India AI Impact Summit 2026. It's going to run for the full week, 16th to 20th, right? 5 days. And apparently hotel room prices in the NCR region are going through the roof. I've heard numbers like 20 lakhs a night, 30 lakhs a night, all kinds of crazy numbers, really. There is, of course, the impact. Perhaps it's not small because it's a full week-long event and the who's here. Jensen Huang, there's Sam Altman, there's all global leaders are going to be there from Microsoft, etc., etc. So attendance is going to be, I guess, pretty strong. But from a hospitality point of view, any thoughts at all, Dipan? These are all listed entities, right? Leela, there's EIH, there is Oberoi, Taj, Indian Hotels, etc., etc. Any thoughts? Is that a space you like? And I guess one can also say that these kind of global events will happen more and more. You had an event of your own, and congratulations for that. But go on, Dipan.
Yeah, I know you were going to refer to that. First of all, good morning and thank you for having me on your show. I think the hotel industry has really hit the purple patch. And I don't think they have seen such great times in the last several decades or so. There is a shortage of good quality rooms, and the average revenue per room also is gradually inching up. And these hotel companies are commissioning new hotels, and those are instantly becoming profitable as well. We are seeing more of these exhibitions and all these conventions which are driving the growth. And of course, there is the big fat Indian wedding industry, and more weddings now are going into larger and larger in terms of grander and grander events, and that's also driving the food and beverage revenues for these companies. And valuations are still reasonable. All of the companies over here, Indian Hotels, Lemon Tree, they're all adding rooms which will be commissioned next 2-3 years or so. So very positive on the entire sector. Our preference, of course, is for the largest company, Indian Hotels. But Lemon Tree also, once the split takes place and Lemon Tree becomes purely an operating company, that may be an interesting business model because it'll be extremely asset light and it'll be able to play on increasing room inventory at the sister concern, which is actually investing in her assets.
Yeah.
Okay, got it. Dipan, first of all, congratulations to Varun, on getting married, and congratulations, you've got a daughter at home as well. So all the best to you as well as the entire family. Dipan, the company we just interviewed, Black Box, I believe you have a view out there. What do you make of this acquisition? They're going to do around 575 crores. Next year, it's going to add another 50 crores to that EBITDA. And organically, they're talking about growing in mid-teens. Your view?
Nigel, first a disclosure, we have invested in this company, and basically last few quarters have been flattish, and that one needs to investigate why. This was a company which was all about increasing operating profit margins because they were taking on projects where the margin profile was far better. So the revenues remain flat, but the profits have gone up significantly last 2-3 years or so, until about 2-3 quarters ago. And it was a great play on the data center industry because they provide infrastructure, equipment for data center, and because of AI and because of increased digital usage, all over the world, investment in hardware is going up, especially networking and cloud services, and this company is bang in the middle of that particular trend. Some of it surprised last 2-3 quarters have been flattish. I'm sure it's just a transient phenomena, and eventually revenues will start to look up. This acquisition certainly is margin accretive and seems to be like at a good value as well. So still remain very positive on the company. Valuations are reasonable, and it operates in USA, so it's not affected by Trump tariffs so much as local operations. And the overseas subsidies, when you convert them to Indian rupee and present your result, you get the benefit of rupee depreciation as well.
I know you don't like the IT companies, and you've been very cautious in this segment. But so I'm not asking you whether this is the time to buy, but how bad can it get, to your mind?
Good morning, Rimati. First of all, whatever the management had to say this round of earnings season, I don't think that this was much of a threat as envisaged by them. But look, it's an industry which is used to disruption. And on the contrary, I think the kind of billings the order book position, the new contracts had improved for these companies. So let's just wait and watch. I think there's a lot of noise around this impact of AI on software services companies. Managements feel it's an opportunity for them. They are reskilling their employees. They're looking at using more and more AI in coding. And on the other hand, a whole host of new AI software companies feel that they will disrupt the software services companies. So one doesn't know really what will happen in the end. You need to be careful about investments in these software services companies. And I think in a matter of a year or so, the outcome will be known. So I wouldn't be too overweight or underweight the software services company at this point of time, but they should be certainly on a very, very strong watch list.
Okay, all right, Dipan, what about LG Electronics? When it listed, everyone was so excited. From the IPO price, it was a 50% uptake. These numbers are clearly disappointing segment-wise as well. We'll chat with the management soon. We know it's a high-quality company, but it seemed to have got ahead of itself because on the listing day, it made that high that we haven't yet seen, 1,750 if I remember correctly. Your view on the name if it opens up a little bit softish?
Actually, again, the disclosure that we have invested in the company, and we remain quite optimistic about the prospects. Valuations are reasonable compared to a whole host of large Indian consumer appliance companies per se, and it's present in so many categories. So you get the benefit of kind of diversified revenues as well. Quality player, great return, fantastic balance sheet, and I think it's just a kind of a soft patch that they're going through. Eventually, once consumer appliance industry picks up per se, especially air conditioning industry, because this summer is expected to be extremely hot. So once those trends start to kick in, I'm pretty certain that this company, and a large one at that too, should be able to deliver at least 13-14% type of top line, bottom line growth.
So you'll be a buyer if it dips today?
Yes, I would.
What about Hindalco? They're having some issues with regard to that Oswego unit fire, which we knew some part of it has been reflected in the past quarter. But the tariff impact actually, though it's there of around $30 million, it's reduced a little bit from the previous quarter. The stock could open up soft today, but actually the core business, the India business is going to do much, much better because of the surge we've seen in aluminium prices. You're interested in 950 rupees or not?
And Ajay, and a lot of expanded capacity is also coming on stream in the next few quarters or so. So that will also drive the volume growth at the India business per se. And I do feel because of Trump tariffs, their overseas company in US has become far more valuable. It has a natural hedge because of the tariffs. And once things settle down over there, that company also should contribute in a more significant manner in terms of growth. So very positive on Hindalco, reasonable valuations as well. And as I said, that even if aluminum prices tend to flatten out, still I think volume growth will drive the earnings of Hindalco.
Yeah, yeah. Dipan, the auto comp space, right? Auto Ank space did very well yesterday. A bunch of names, range of companies. Lumax Industries, Lumax Tech was up, Bellrise was up. A tire company like JK Tire, of course, I think numbers are a part of it. Sansera has done phenomenally well. So this auto comp is firing, is starting to do well once again. Any thoughts?
I think the entire transportation industry is doing well. So auto ancillary companies engaged in pre-owned vehicles like car trade, tire companies, I think all across the board they are doing quite well. And auto OEMs also per se are doing exceptionally well, particularly like the results of Eicher Motors. I cannot keep coming back to our favorite company, but exceptionally good numbers over there as well, and the stock spiked yesterday. So very positive on the entire sector. But within the auto ancillary, I would like to go for companies which are more on the electronic side and not on the engine part, because at any point of time, this EV can kind of disrupt their businesses. There's a new listing which we are particularly interested. Again, usually disclosure we and our clients are invested. Is SJS. It's quite an interesting company, and it manufactures a lot of stuff which goes into premiumization of the auto industry in terms of design and in terms of beautification of the product per se. And apart from that, I think also very positive on all the auto OEMs, especially M&M and Eicher.
Yeah. A lot more questions, Dipan, but out of time. That's usually the problem. Thank you for joining us, and have a restful next few days. It's been hectic.